Hi everyone, welcome to the channel. In today's episode and in subsequent episodes, we will look at Option Strat, which is a fantastic toolkit that anyone who wants to be serious about their options trading game would like to look into. As you can see from the website, this is a tool that focuses only on options trades, and you can use it to build strategies, to optimize your trades, or to find opportunities. And we're going to spend this episode and future ones looking at the different features of option strat and what you can do with these features as you create opportunities for yourself in the options game. All right, let's get it. In today's episode, we're going to start from the basic strategies. So, those of you who are beginners with options trades can look at these basics as a way to explore or dip your toes into the world of option trades. And we will look at the long call strategy. The long call strategy, what you're looking at is a situation where you're bullish about the underlying asset, but instead of buying the stock at a particular price with the expectation that you will sell at a higher price, you can use the long call strategy to increase your profit potential while reducing the loss potential that could come if things go south on such a trade. So, if you think, for example, that if you're buying the underlying asset directly, let's say the underlying asset is selling for $100, you could lose your entire $100 if the price of that asset goes down to zero. Is it likely to happen? Probably not, but that's a potential scenario. And with the long call strategy, what happens here is even if the price of the underlying asset goes down to zero, the total amount that you could lose would be the amount you pay to buy the long call option, and that's it. But you also have the potential for your profit to go very, very high. And even in situations where the price of the underlying asset doesn't go up by a lot, your profit potential from the related long call option could be way higher. And we will see this in the example that we will look at now. So, how do we find stocks that you can be bullish about? In other words, how do you determine stocks that you anticipate that their price is about to go up? If you've been on this channel before, you will remember that we've talked about Finviz, which is another fantastic tool that you can use to screen specific stocks. So if you go on Finviz and you click on the screener tab and then you select the all sub tab, what you're looking at is stocks that are optionable, and in the signal drop down, you want to scroll down and select channel up. So this has filtered stocks that you can buy or sell options on and for which are trending up. Now you want to click in the charts sub tab and you will see an array of different stocks that seem to be trending up in their value. Let's pick out ticker symbol FIBK. Now, ticker symbol FIBK is First Interstate Bank System, and what you will see is from May till November 2022, it has had a series of lower lows and higher highs in its stock price, which means that this is indicative of an upward trending stock price. Now, right now, it seems to have bounced off the resistance and is trading at 43.98. So you expect that ticker symbol FIBK, should start going back up towards the $46 mark. So this is a potential candidate for a long call options trading strategy. So we're going to look at a comparison of trading the shares of ticker symbol FIBK with if you trade the long call strategy. Today is the 24th of November 2022. Ticker symbol FIBK is trading at $44. So if you buy 100 units of shares, you will fork out $4,400. Now, assuming that ticker symbol FIBK is trading at $44.8 on the 30th of November 2022 and you decide to sell your 100 units of shares, you will receive $4,480, which translates to an $80 profit on the shares that you purchased. This would mean that you made a 1.82% profit on such a trade. Let's look at what the long call option for such a scenario would be. Again, ticker symbol FIBK is trading at $44, but you decide to buy the $45 call that will expire on the 20th of January 2023. For buying that call contract, you will pay $140, and that is the maximum amount you will lose on this trade. Again, fast forward to the 30th of November 2022. If the price of ticker symbol FIBK is $44.8, you can sell the call contract that you've bought and get a profit of $27. That means you will be able to sell your call contract for $167, and if you're making a $27 profit on a $140 investment, your return on investment is 19.29%. Now, what you see here is you're using the call contract to reduce your investment amount, that is $140 compared to $4,400, but simultaneously you're able to increase your profit potential, that is 19.29% compared to 1.82%. This is the value of using options as a tool to increase your profit potential while reducing your loss potential, because the worst case scenario is you would lose the $140 that you paid to buy the call contract, whereas with purchasing the outright shares, you're spending more than $140. You're spending $4,400, and while it is unlikely, you could lose all of that money if FIBK went under after you purchase their shares. Of course, this is the value of the Option Strat website. It helps you to be able to visualize different scenarios. So, for example, you could look at what would happen if you traded call contracts that expired at later dates. This is the June 16, 2023, the March 17, 2023, the January 20, 2023 call contract expiry date. You could also visualize what would happen if you reduce your strike price. In this case, your net debit would go up, or if you increase your strike price, in this case, your net debit would reduce. However, the price at which you make a profit towards the end of the expiry of the contract increases, which means that your probability of profit reduces. You can also increase the chart range to show a higher variance of price range. And if you know what the implied volatility is, you can also see how that impacts your profitability matrix. So this is the value of using this optionstrat.com website. There are quite a lot of features that we can talk about, and we will cover some of these features as we go along in subsequent episodes. In the next episode, we will explore the reverse of the long call strategy. This is the long put strategy, which is a bearish strategy. And the bearish strategy implies that you anticipate the price of the underlying asset to go down, and you can use that to explore how to profit from such a downward trend. Thanks for watching. Be sure to come back for future episodes where we talk about some of the other features you can get on optionstrat.com. If you like what you see, please hit the subscribe button. Also hit the notification bell so you get to see new content as soon as they're uploaded on the channel. If you've got a question, please leave that in the comment section and we'll respond. And if you enjoyed the content, please hit the like button and share with those on your social feed that you think will benefit from this content. As always, check us out on Twitter and Instagram.